Hello, everybody, and welcome. Today, my guest is Gabriel Sacks from Aberdeen Standard Investments. Gabriel is an investment director, Asian Equities, and today we want to discuss investment opportunities in Asian small caps. Welcome, Gabriel.
Thank you very much.
Gabriel, why should investors look at Asia small caps today? What are the advantages of allocation in small caps nowadays?
Yeah, I suppose there's a short answer, which is really you can enhance returns and also reduce risk via diversification. But I think a good way of answering the question is to split it into why Asia and then why small caps. I think the easier question is probably why Asia. I think it's a powerhouse of global growth. If you think about the region as a whole, it is the largest consumer market globally and growing the fastest. So that presents phenomenal investment opportunities in various industries. Aside from that consumer opportunity, there's also the manufacturing side where Asia controls a lot of the supply chain for a lot of things that are done everywhere in the world. So there's, the region is tied to a lot of fundamental growth drivers. The second part of the question is why small caps in Asia? And there, the dispersion of returns in small caps is larger than large caps. So that means if you pick the winners, you can achieve better returns. Secondly, if you're picking quality companies, that can actually reduce your risk if you combine an allocation to small caps with an allocation to large caps in Asia, for example. And beyond that, Asia has managed the pandemic well. As economies recover, small caps tend to do better, and you have seen that play out recently. And valuations look pretty reasonable to us.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
So especially last year, many investors looked at the tech giants like Alibaba and Tencent, so especially growth stocks. How have small caps performed last year during the COVID-19 crisis?
Yeah, it's not too dissimilar. I guess it was a pretty unusual year, and you saw the tech market do fantastically well for the reasons that are quite obvious. You saw an acceleration in digitalization trends, and it's a pretty sheltered sector in terms of the pandemic. But in small cap, you also saw healthcare do very well. Not just because people, I think from a sentiment perspective, wanted to have that allocation to a sector that is quite resilient, but also there was quite a lot of speculative activity in areas such as Korean biotech names, for example. And there were some other more temporary boosts to things like Malaysian glove manufacturers, given, again, the demand for gloves during the pandemic. But generally speaking, North Asia did a lot better than Southeast Asia, predominantly because of the way that they managed the pandemic. And if you look at growth globally, most of that growth came from places like Taiwan and China, given how they handled the pandemic. And they've been 6 months into sort of a normalized behavior, really, from a business perspective.
So when it comes to global small caps, there's always a discussion going on about valuation discounts. How is the situation in Asia? How are small caps valuated in comparison to their larger competitors?
Yeah, so we've had a good 12, 16 months or so for the asset class. So valuations are not as cheap as they were, but there's a big contrast by sector. So you have growth stocks, you have a lot of value stocks, but I think you do need to be a little bit careful on the value side because of liquidity issues, whether these are value traps or not. So we tend to be a little bit more on the growth side, but we see a pretty balanced opportunity set. And I think things that haven't done too well, such as financials, real estate, selectively, there are some really good opportunities there. I can think of a bank in Vietnam, for example, that we hold that's doing fantastically well, it's still quite cheap. And also we're quite excited about things like Indian residential real estate, which is a sector that probably wouldn't be something that you would consider at this point, but we see for good quality companies, there's a big consolidation opportunity there. And, we think the good guys will become even stronger in this environment.
Which industries and sectors have underperformed last year and could be a good bet in the post-pandemic times?
Yeah, it's really what I've just referenced to. I think financials and real estate, we're still quite cautious on areas like leisure and hospitality. We own a couple of airports in our portfolio where, a reopening could be quite helpful to volumes coming back and fees for sort of traffic and non-aeronautical revenues coming back. But that's a very small part of the portfolio. I think we're still very heavily overweight in areas like tech and industrials as well, which is an area that Asia does quite well in.
So small caps obviously are generally less known in comparison to larger companies. So how do you find interesting stocks in the small caps universe, and how do you deal with the lack of information that's always there when it comes to small caps?
Yeah, we see the lack of information as a huge advantage for us because it really presents opportunities to generate alpha. You reference things like Tencent and Alibaba, and those are companies that are owned across the board and covered by hundreds of analysts. So in the small cap space, we have 40 fund managers or so across Asia. And they cover large cap as well, but they're uncovering opportunities for us across the spectrum. And for us, it's all about quality. So we filter our investment universe by looking at companies that have strong management teams, good governance and ESG, a unique business that has sustainable competitive advantages, and typically healthy financials, which means a strong balance sheet that can survive any crisis. So that really narrows down the universe for us. And then we're quite diversified by sector and country. So that's really how we allocate across the region and focused on that quality end of the spectrum.
So can you give us some examples of stocks where you recently bought in and raised the stake in your portfolio?
Yeah, so we already have a very big allocation to the semiconductor supply chain. So we haven't been adding too much to that, but that remains a key part of the portfolio for us. And that's seeing quite good momentum at the moment, given sort of tight supply in semiconductor chips globally. Where we have been allocating a little bit more is to areas like China. There has been a bit of a pullback recently, and we have been, it's a huge market, particularly the A-share market with 3,000 plus companies. So there's a lot to uncover there, and we've been adding a bit to healthcare and consumer in the China small cap space. But India is another market that we like a lot, and it's been quite volatile. So we continue to add to our positions there when there's a bit of a wobble.
So interest rates have been very favorable since the global financial crisis. Currently, there's a discussion going on that interest rates could rise again. How would that affect small caps? How would that affect especially Asian stocks? And is this something you consider for your portfolio?
Yeah, there's two aspects to this. There's the impact at the portfolio level in terms of flows to the asset class, and then the fundamental impact on the businesses. We focus more on the fundamental impact on the businesses, and there we're very comfortable with rates and inflation where they are. Obviously, there's a big debate about whether inflation accelerates from here structurally and to what extent, and whether rates go up. At the moment, we're quite comfortable. We think a little bit of inflation is quite healthy for Asian small caps. And we think that our businesses with that strong balance sheet should fare really well, even if rates go up, because they are an advantage versus their competitors. But the more risky aspect is at the portfolio level and what happens to flows to Asia and small caps if the Fed were to start tapering and raising rates. So that's really the critical question for a short-term investor, really. But if from a long-term perspective, we remain quite sanguine on the opportunity in Asia. We're very excited about Asian small caps at this point.
So this was Gabriel Sacks from Aberdeen Standard Investments. Thank you very much, Gabriel, for being with us today and sharing your views.
Thank you for having me. Pleasure.